Hi everybody, so this discussion is on Goodwill. So Goodwill, what that means is you are purchasing a company for more than it's actually worth. Okay, so we're going to go through kind of the process that we need to do with that. And I have some information here where Links Incorporated, they had the following balance sheet as of January 1st, 2000 whatever. So we have cash of 15, inventory of 43,800, property, plant, equipment 215, patents 25,000. We had accounts payable at 28,500, notes payable 98,200. So shareholders' equity of 172,100. So both our debits and our assets equal our liabilities plus stockholders' equity. On January 2nd, Widget Company purchases Links by acquiring all outstanding shares for $350,000 in cash. On that date, the fair value of the inventory was $35,000 and the fair value of the equipment was $260,000. In addition, the fair value of previously unrecorded customer list was $32,000. For all other amounts, the book value on January 1st equaled the fair value. So what we need to do is we need to figure out how much our goodwill amount is going to be. So I will come up here and I'm going to look at my purchase. We purchased it for $350,000. So then what we need to do is we need to look at Links Company and determine certain variables. So we have a book value of identifiable, let me see if I spell that right, TIFABLE, net assets. So your book value of your identifiable net assets. This is going to be the difference between your cash inventory assets minus your accounts payable and your notes payable. Okay, so that's 300. Okay, that amount's not right, so I need to add. Okay, so we have 172,100. Again, that was, and let me put the little calculation over here. We took our 298,800 from our assets minus the difference between the 28,500 plus 98,200. Okay, that was how we did the 172,100. Then we need to do the reevaluation of inventory. And on here, I have inventory at 43,800, but the fair value of the inventory was 35,000. So we take that $35,000 minus our current inventory. That gives us a valuation. We went down on our inventory by 8,800. Re-evaluation of property, plant, and equipment. Oh, well, that didn't, I thought I had that. Okay. So reevaluation of our property and plant and equipment, we have $215,000, and the fair value of the equipment was $260,000. So we went up by $45,000. Now they also noted that the rest of the accounts payable was the same, notes payable was the same, but they had unrecorded customer list. Okay, that's a value. So that was at $32,000. So our current fair value of identifiable net assets was a total of all of these together. So then our difference let's see if I can ATRI, yeah, attributable to Goodwill. I can't spell Goodwill. Let's get that spelled right. Let's come up here and, well, I'm goofing it up, aren't I? That's what you get for typing. Okay, so the difference between those, the 350 and the 240,300, is 109,700. That is the amount that we are going to record for Goodwill. So we need to do the journal entries because what we're going to do is Widget Company has purchased all of these assets, the liabilities, and the shareholders' equity from Lynx. Okay, so we need to acquire cash of $15,000. We need inventory. We're going to record that inventory at the fair value of the inventory of $35,000. We have property, plant, and equipment. I can't spell. That one we had a fair value of $260,000, so we're going to acquire it as that. We had a patent. That was fine at $25,000. We've gained that. That customer list, that's at the $32,000. Okay. Our Goodwill, this is the $109,700. So those are our debits. Our credits, we acquired the accounts payable. That was at $28,500. Let's format. The notes payable, we acquired that at $98,200, and of course these are not going to be how I like them. Okay, and then finally cash that we actually paid of $350,000. So this is 476,700. 476,700. So that is how you figure and determine how much goodwill you're going to acquire. Probably the most challenging one is understanding the identifiable net assets. And again, that is your cash inventory, pretty much your assets, and you subtract it from your liabilities. We do not take into consideration shareholders' equity because then we would have been zero. But we just look at our liabilities. And then we have to understand what the fair value of each one is. And this gives us how much we're going to record in our statement. So now Lynx Corporated is no longer in existence and Widget Company has taken over this. And companies do this. I will, as an example, we had a company that we purchased another one for a greater amount than what it was worth. But it was very beneficial to us because in the long run it benefited our company. So that's when this situation may acquire. So I hope this has helped you with understanding the concepts and what you need to do for Goodwill. Thank you.